Hey, it's Matt with PriceActionTradingSystem.com, and it is Tuesday. It's April 14th. This will be our chart lesson for today. And I wanted to show you something here real quick. Somebody asked me how to find daily charts. I'm going to pause this video 1 second. All right. If you look here, magically we're now at a daily chart. And you can see goes back in May of last year sometime. And you can see the daily candles, and you can see the huge sell-off here. But the reason I really wanted to show you this was two reasons. I wanted to show you how to find a daily chart. One is go to your data series and type, instead of choosing tick or volume or range, just put day. You can do a weekly, a monthly. I don't I never really look at these very often, but there's a daily chart. So uh, and there it is. But what I really wanted to show you was, notice we had this big move down, and now we've got a two-legged correction working in here. And if you measure this first leg, like so, and then you're looking, we almost have a measured leg in there, not quite. That's what the little blue line is. So there's a possibility that once you see this measured leg, we may sell off and get another leg down like this, or at least attempt to retest these lows. So, and you see how close we are. So we could see another sell-off starting any day now. Uh, don't don't go take any trades based on me showing you this. Don't be going and guessing, uh, because we may just keep going higher. I may be wrong, but I'm just telling you. I show you these measured moves all the time, and how a lot of times you get the center of the pattern and so forth. And so we may get a second entry short here on a bigger on a day. We actually, if you just look at the breaks lower on this on the daily chart, I'd want to see two measured legs and then turn down. But you can see we actually broke lower right there. So technically there was a second entry short right there, and it would have been a failure. And we may just keep going higher. I mean, I may be wrong here. You notice that we haven't come back really and tested this area across here. So we're just now really testing that. Uh, so that might be good enough, and that's right about where the measured move is. So it wouldn't surprise me if we turn down and start heading lower again. So I just thought I'd show you that. I'd show you, plus show you how to find the daily chart. So I hope that's helpful. I don't want to spend a lot of time on that, but there it is. Okay, the other thing I wanted to show you was, here's actually somebody sent me their Thinkorswim chart, and I wouldn't pay attention to these trend lines or these support and resistance lines. They may or may not be right, but I just wanted to show you how much different his chart looks than mine. But he's really showing you from about 9 o'clock to about 11:15. So let's get my chart up here. Okay, let's see if we can. But you can see really how much different my chart looks than his. The main thing I wanted to show you was um, he took a trade right in here, and you can see how many bars I've got. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars right there. I've got a first entry, second entry, third entry, and then a fourth entry before we finally make a new swing high. So that's a fourth entry long right there. And you look at his chart in the same place, he's got a first entry and a second entry. Okay, there it is. I made my chart look a little closer to his. He's 2 hours ahead of me, so he's on, I believe he said he was on Pacific time. Pacific time. But that's the same entry right there, I do believe, around 1 o'clock. So that would be around 11 o'clock on his chart. and you can see that right there. But he's got 1, 2, 3, 4, 5, 6, 7, 8, 9. He's got 10 bars. And really, what it is, you're going sideways here, and you get a little breakout, a little two-legged correction that comes back and tests that, and then the trend goes higher. And you can see on mine, you get that same breakout, and you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's 10 bars in mine. I can't remember, but you can see there's 1, 2, 3. That's like a fourth entry. And then on his chart, he's got 1, 2, 3, 4, 5, 6, 7, 8. There's not a whole lot of difference in the bars, but you can just see he doesn't have nearly the, he just doesn't have as much, there's just not nearly as many details. He gets a second entry, which is a nice, it's a nice signal bar. It would have been a quick, easy trade. He said it failed, but it does not fail. So unless I misunderstood, unless he marked it wrong, if he put his stop below the signal bar, which is down here, there's no way he got stopped out. It was a good trade. So I'm not sure why. I guess he can. I asked him, I wrote back to him and said it didn't fail, but I never heard back from him. So, but I mean, you can see you get a break, and yeah, it backs up. But that's why you put your stop below the signal bar, which is right down here. So if he put your, if you put your stop anywhere else inside there, then yeah, maybe you did get stopped out, but the trade didn't fail by the rules if you followed the right entry technique. Your stop always has to go below the signal bar, and that's another good example of why you do that. So, but anyway, you can see his chart here, what his, you can just see he doesn't have as nearly as many details in his chart as I do. There's one more look at mine, my chart. So anyway, I thought that would be helpful to put that up. I did want to say too that I did a little more digging on Thinkorswim, and there's probably, if you're just taking a trade occasionally, or if you are swing trading, you're probably okay using Thinkorswim. But it's not made for professional day traders, and you're going to be at a disadvantage. So if you really want to do this and you want to be a day trader and trade futures, you need to trade on something besides Thinkorswim. So you're definitely at a disadvantage. I can promise you that. So nothing wrong with their software. Their data's not really up to snuff in my opinion, and their charting really isn't either. So again, if you're just using it for swing trades or purchase options and things like that, you're probably fine. But if you're trying to use it to day trade and take multiple trades every day, day trading, you're going to be at a disadvantage. So I'm going to leave it at that. But anyway, we'll move. But the other thing I wanted to talk about real quickly before we get to the chart is risk versus reward. I've been getting this question a lot, especially after my trade. People will say, you were risking, I don't even know what I don't even remember what it was on that trade, how big the bar was, but they said you're risking, 100 points to make 30. That you're going to end up blowing an account, or you're going to, how can you win like that? Well, we have an 8-tick rule in place for a purpose, and that's for inexperienced traders and newer traders to keep them from doing exactly what they're concerned about. But a risk reward, this is my opinion. Honestly, I don't worry about it. I enter my trade, I put my stop where it goes, and I take my trade. And most of the time I'm not wrong. Occasionally I am, but I'll make it up on the next trade. But the problem is risk reward. You'll read a lot about that, and people get so hung up on it. And I understand why, because if you have a losing strategy or you're a gambler, you can't make it without risk reward because you lose too much. But when you know how to read this chart and you know where the entries are, and most of the time you're getting them right, you're not going to have that many losing trades. Sure, you're still going to have a losing trade because sometimes it just happens. Sometimes you're going to read it wrong. Sometimes there's going to be a trap, whatever. You're going to have a losing trade. It's part of what we do. But honestly, I don't worry about risk or reward. It's never a problem. I'll just be honest with you. But I'm reluctant to say that out loud because I know what now. Some of y'all will hear me say that and you'll think, well, I can do that too, and then you'll blow out your account. So we have an 8-tick rule in place. It's there for a purpose, and so use it. But what we're doing right now with the volatility in most cases is I'm telling people that anything you have to use above and beyond the 8-tick rule, add that to your profit target. So let's just say you're going to enter right here, and let's just say it takes 16 ticks to put your stop down here below the signal bar. Let me just make this bigger. I don't know how big this bar is. I can't say. I haven't measured it or anything, but we're just going to assume here. Here's one right here. You can see that. Assume we're going to go long right there, and that's a 16. It takes 16 ticks to put your buy stop there and your safety stop down here. Well, 16 ticks, that's 8 ticks bigger than our normal 8-tick rule. So we're adding an extra 8 ticks there. So what we'll do is add an extra 8 ticks to our profit target. And that's how we'll offset the difference. That's what I'm recommending people do. The other thing is you can wait on the trigger here and drop a limit order in and see if prices will pull back and fill your limit order and then go up. And that actually may have happened here. It came all the way back to here before it closed up here. So you might have gotten filled within the regular 8-tick rule by using a limit order here. You have to wait for the trigger that normally would have filled your buy stop. Just let that happen and then drop a limit order in and then see if it'll back up and fill you. And you would have had to wait a few bars, and I don't know if I would feel comfortable doing that because you see it wasn't long till it went the other way. But a lot of times you can do that and it'll come back on this bar and fill you and go forward. The problem is you'll miss the best trades. Like right here, you'd have missed this trade trying to get filled way up here. Prices never got back up there. They did back up some, but you never would have got filled back here. So you would have missed this really nice short here. So that's one of the dangers of that. So the best thing to do is just do what I just told you, is whatever additional ticks it takes above the 8 to put your stop down here where it blows, your safety stop, add that to your profit target. So instead of going for 4 ticks of profit, we'd have gone for 4 plus the extra 8 that it took to get down here, so we get a 12-tick profit target. And you could have still done that on this trade and been successful. So I hope that's clear. So on the risk reward, but I'll be honest with you, I don't worry too much about it. If I see the trade, I like it, it fits our criteria, and I like the read, I just take the trade. So, but I know that new traders and inexperienced traders, you really can't do that because you'll have a lot of trouble. So there's a reason for the 8-tick rule. Somebody else asked me about flags and pennants and all that. Forget about all that, because what causes those, I don't believe in any of those patterns or any of those trading rules on them. What causes those are intersecting support and resistance lines. That's what generally causes them. Let me see if I can find one here. A good example of one, I guess, is what I'm saying. But you can see right here, we shot up and just went sideways. We just went in a range right there. You had a trend line here, and you had a break, and prices were trying to go lower, and that was holding. Then the EMA was holding a little bit. We just really ended up going sideways. But and you know, that looks like a flag. And you know, that I think they would tell you to trade any breakout. But you noticed it went short and failed first, so you're better off to trade the range rules, because you would have got long right there and been able to ride that all the way up. Here's one that looks more like a pennant, and again, we just went into a range. I don't see any really good examples today, but generally what happens is you're running into competing you're running into competing support and resistance lines. Like you've got a trend line coming down here, but you got one coming up, and they run into each other. And a lot of times they'll, like you might have a flat resistance up here, and then you got a trend line coming up, and you'll start bouncing off that one down and this one up, and it looks like a pennant or whatever. And that's what causes those. So I don't believe in any of those trading rules you see that says if you see a pennant, go long, or if it breaks out this way, go short. Honestly, I'd forget all that because they're losing strategies, and you'll just lose money. So I don't believe in them. What causes them, like I said, is competing. Here's a good example right here. We came up and you've got this, you can see we got, it looks like a flag or whatever. You got the flag pole and it comes up and it goes sideways. But what's happening is you just got resistance here, but you've also got a trend working up. And they just kind of compete into one right there. And you can see it, we're bouncing here. We actually push on through there, so it's still not a great example. But you'll see them occasionally, and they're just competing patterns is what they really are. And I don't believe in them. And if you start putting your lines on here, you'll understand exactly why they're there and what you'll understand why they're there and what's causing them if you start to learn how to put your lines on here and follow them. And then I think I talked about this yesterday, but I'm going to mention it again today because I've gotten some more emails. But I get emails from people, and they say I haven't had a winning trade yet. And I'll ask them how long they've been doing this, and maybe a week or two, and it hadn't really hit with them. And then a lot of times they'll say, but I've been trading 10 years, and unfortunately, my response back is you probably learned everything you learned wrong in those 10 years is wrong. And if you're trying to combine what you've been doing with what we're doing, it's not going to help you at all because, as I said before, we've got this down to a science. We know what works. Don't try to change it. But people will still try. They've learned a lot of bad habits. Something that maybe worked once or twice and they made a lot of money on it and they're trying it over and over and over, but it's just a losing strategy. Yeah, occasionally you'll get lucky, and you'll get that base hit, or occasionally you'll get lucky and you'll stick your bat out and it'll hit on the sweet spot and it'll go over the fence and you'll hit a home run. But it was just luck. It wasn't because you're skilled at swinging that bat and doing that consistently. And that's the difference. So don't think if you've been trading 10 or 12 years, if you've been trading that long and you don't have success, you're not doing the right things. If you'd been doing this for 10 years, you would either be trading professionally and making a lot of money, or you can't do this most likely. Because 10 years is a long time. And not everybody can conquer. I mean, even if you understand exactly what we do here and you get good at it, because there are people that are good at this part of it, but they still can't conquer the mental aspect of it. They can't do this when their real money's on the line. They'll take bad trades. They'll skip the good trades. They'll talk themselves. And that's what happens. There's a little guy that sits on your shoulder here, and he'll talk you into the worst trades ever, and he'll talk you slap out of the best trades ever. And that it's a little voice. You can either just picture the little guy sitting on your shoulder or that little voice in the back of your head. If you've traded, you know what I'm talking about. You've heard him. He speaks to you and he tells you dumb things. And he talks you into the horrible trades. He convinces you to take the worst trades. And he talks you right out of the best trades. And it's just human nature. It's a psychological part of what we do, and there's definitely a psychological aspect to this, and you got to get over that hump. So just because you learn even what we do doesn't mean you can even apply it. So there's two learning curves. First, you got to learn the strategy and how to read the chart and where to enter, but then you have to get past the emotional part of it, and you have to be almost like a robot, as you heard me say before. You got to know when to enter, And you know, when a good trade comes, you can't hesitate. You have to take it. And when there's, you know, if it's an iffy trade, you can't be impatient and talk yourself into, you know, I hadn't seen a trade. I mean, sometimes you might have to wait. Like from here, this was around 8:40, 8:35, or 8:40 or something, and you didn't get another trade until 10 o'clock. And I guarantee you, there's a lot of you just entering all the way up through here, and probably at least if you're entering with a trend, you might still get lucky and win, but you'll probably get unlucky and lose too. And it's hard to be patient that long, but that's what a good trader does. They sit here and they don't take another trade till here when you get another setup. So, um, and not everybody can do that. But anyway, let's talk about the chart and some of these trades today. And I've circled a couple I want to talk about too, where some people took some trades. But notice that there's two legs up here, and then we had a correction. So this was easy to find this morning. Measure this first leg, and then when we started higher from right there, you're looking for a target of right. If I can get my line on there, right there. And look where prices went, almost to the tick, and then turned down. So if you knew how to find these targets, you might have already had a clue that, hey, we may turn down once we reach there and get a correction. It may only be a temporary correction, which it was, before we went higher again, because, and you couldn't really find this brown channel until you got this next swing here. And this channel really doesn't help you because we didn't bounce off that trend line again. We didn't bounce off here. Now, the midline, you can see it came into play all up and down through here. So that might have helped you with a few longs and might have helped you understand what was going on in a few places up here. But the brown channel didn't really help you. But you can see that midline was coming into play even way back here at before 8:30 this morning, between 3 a.m. and 8:30 Central Standard Time. That midline was still coming into play, but you couldn't really find it until you were able to get the trend line or either the trend channel line, and you never got it another touch up here, so you couldn't find it off the top in advance. So you really couldn't find that until you got that next swing right there. And it doesn't help you a whole lot, but I put it on there because that's what, if you know that the next time you hit the top or you hit the midline, and it starts working lower, you know what your target's probably going to be, which is down here. We never got back down there because we were still working back to the upside, and we never got up there. And actually, you would have taken this same target and to see if maybe you notice my line up there, if we got back up there, and we never quite got back up there before we ran out of time today. So, but let's talk about the trades real quick. Again, I just marked some second entries. Somebody said they liked the arrows better than the circles, so I went back to the arrows. Notice the first trade right there. This one is, I meant to make that black, not navy. Because it's not a very good signal bar. But it is a second entry. Actually, I just marked the wrong spot. That's what it was. I just put it in the wrong spot. So let's back up here. There was your second entry. Right after 7 o'clock hour. Notice the new high. First entry, second entry, and it took off. And you know, definitely measure this. I'd measure from here first. So you were looking for a measured move up, but I'd also measure here. That would probably be my first target. And you can see we pretty much hit that one to the tick before we corrected a little bit and then pushed up and then turned down. So, but notice that second entry. Notice the new high, first entry, then you pull back, second entry. The key is, do you have enough room to scalp out before you get here? Probably not using the 8-tick rule add-on or whatever we want to call that, because your target would have been a lot higher. and we run on up. We come back. You get another second entry here. Not a very good signal bar. I could have marked that one black because it is a second entry, but it's not a very good setup because your signal bar is too bearish. Now, if you had a good signal bar there, you could take that one too. Then we start working back down. We bounce off the trend line. We bounce off of it again. So you really get a higher low right here. Notice I didn't mark that one though because it's right into the EMA, and look how we've already turned down off the EMA once. You got to be careful. That EMA works just like a trend line, support and resistance. And so going long right into it, sometimes you usually want to have a little room back to it. Now, if you've been trending up for a long time and you just kind of push through like that, I wouldn't worry about it too much. But right here where you've come through and you've already turned down off it once, you got to be careful of it. So then you get a reversal pattern right here. A failed second entry short. Notice that low, first entry, second entry, it fails, gives you a bullish bar right off the trend line. I mean, look, we tested it once, twice, 3 times. Just go long right there. It's not a second entry, but it's another pattern we like to see. It's just basically a higher low. And we closed above the EMA that time. And you'd already pushed through it too before you pulled back. Nothing here. There's not really another good entry. There's another, this is really 2 legs back. And actually, if you count there, there's a second entry. But again, it's not a very good signal bar. Again, that's right off the key entry point. It's a relatively small bar. So if you had a good signal bar there, there's you another perfect second entry. Go long right there. But you're moving up, and there's another second entry right here. You can see on my chart it's not very good. I circled it because a trader asked me, at least 2 or 3 traders asked me about this. But I'm going to show you what you could consider here. Some clues that would keep you out of this second entry if it was good. But you can see mine, this is really your signal bar right here. And this is just an inside bar. So those are never reliable. So I didn't, if you took that, it's a quick failure. It's really a long trap. And this was a long trap. Notice how it rockets down real quick. You trapped a lot of people off. But let me show you. First of all, this was where your measured move was to, this blue line. And notice that we pushed through it, but we ended up closing below it. We've already met our measured move with 2 legs up. So now we'll probably get a correction. So that's one clue. The second clue is notice how we kept pushing up to the upper side, then coming back, and now we're pushing up again, but we can't even get back to that midline right there before we turn back to the trend line. That's telling you something, because normally you're going to at least get to the midline and maybe even back up here. But this resistance area of the measured move is holding right there and won't let you through, and it turns down. That's not a good sign. So that's another clue. Then, of course, always draw your short-term trend lines, just like I drew them here. And notice you do not have a close outside and a new low yet if you go long right there. Yeah, we closed outside. Maybe you could argue it's not even a convincing close. But notice how that little channel is still in play, and you get a close outside here, and then you couple of legs down to a new low, and then you bounce again. You get another correction. But this is probably just one leg right here, and you'll probably get another leg. So we're looking for prices at least come here, but this thing goes a little further before you get a correction. So it's getting more bearish. But yeah, draw those trend lines, and you can see there's a little channel right there, and there's your first close outside. So you're expecting prices to come back down and retest the low, the last low it made before the break. And somebody else had some, I think they had some misunderstandings about that. The retest is of the low, not this high. If you got a trend line working down, the break, your retest will be down here. If you're working up here, you get a break. Yeah, you're expecting you may get a retest of this, and you do, but you get a bigger correction before that happens. So I hope that's clear. And so you get the break. We're looking for a retest of this low. We work on down. But we don't get a second entry till here. And notice that new low, and then first entry, second entry, nice bearish bar. Off it goes. You don't really get another one here. First entry, that is technically that's a second entry right there. It didn't break higher. It's not a great because it's an inside bar. It's not a great setup, but it's still a second entry. But it's right into support. You don't have much room to scalp out. It's way down here. It's just not a good place to way away from the EMA. So then we run back up, get a break, first entry, then second entry, and that's not a great bullish bar, but you're looking for prices to come back to here at a minimum. So you may take that trade. It's not a great setup. Generally, on a trend down like this, you want to wait till this trend is, you got a confirmed trend in the other direction. So, which you kind of do. You got this little short-term one right here. This is just our arrow going up. We'll move it out of the way. But you can see that trend line working up. That's the first break. So we'll probably get a retest. We're expecting prices to come back to this trend line, and there it goes. It actually pushes on through. And then we just start working sideways until you get a failed break lower. And I like going long right there just because you're going sideways and you're expecting prices to probably come back in here, and this thing just takes off. And I talk about this a lot. Those failed breaks often give you important lows or highs for the day, and that was an important low because we didn't make another low lower than that the rest of the day. Then we ran up, and notice how this is almost a perfect repeat pattern. Notice the little move up, a jog back, and then up into this, the move up, the jog back, and then up into this. It's a perfect repeat pattern. And guess what? It breaks lower right here. Now I circled this green too because another trader took this trade and his failed right here. Setup was totally different, but notice my little trend line coming down. I get a close outside, move to a new low, and then I get a second entry long right there. And it didn't go far, but it still would have worked if I took the trade. I wouldn't take it because we're not back to the trend line. I may take it because it's a repeat pattern, but really you get another little opportunity here right off the trend line and it takes off again. So, and you also get a double test here. You draw your little support line. And notice we made the low, we came back, we tested it, we went higher, we came back and tested it again. So when it broke higher, it was a double test. But the big thing is it confirmed this trend line on a little failed break lower. It's almost a perfect repeat of this. So this first one kind of fakes you out. But I have the other guy's chart here. And you can see he had a bar here and it broke higher and turned down and then went up, which mine did the same thing, but I had a bearish bar here and a bullish bar here. So, you know, is that bad luck? What? And technically you could say there's a first entry there and a second entry, but literally you'd want to count that as a double top. I mean, you got those three bars running across there. So really that's just a first entry. So wait on the second entry, which he gets one right here, but now he's right into the EMA. And we talked about that because you see what happens. It bounces into it and it rejects it and it turns it back down because it's like a support resistance line. Notice how it does that all the way up and down. So that's what his chart looked like. And again, there's mine right there. It looks totally different. I mean, he just had a little, but the key was we weren't back to the trend line. So, and even if you look at this as a second entry, notice we're kind of starting to go sideways. I marked that trade because it fits, but I probably wouldn't take that. I'd wait for it to come back to the trend line. And if you catch that one, boom, off you go. So then you had to just be patient. You don't get it really from just a little after lunchtime to all the way to 1:30 till you get another trade. And most of you were probably looking for something in here. We already talked about this. The other trader entered there on the Thinkorswim because he had a second entry here when I've had a 1, 2, 3, a fourth entry. So that shows you the difference in the data. He's just not getting enough details. So he takes a trade right there. But we're not back to the trend line again. And plus, you've got your trend line working down and you don't have a close outside of it yet. So you get a close out here. It tries to come back. Eventually it does, but and I wouldn't be averse to taking a good second entry here. So I understand why he took that trade. I mean, it looks pretty good, and he's got a trend line here, although I don't think that's correct. So he's got a bunch of lines going through here that I'm not sure what he's got going on here. But notice that first entry, second entry. But he just doesn't have enough details in his price action. So it looks like a great, and the thing is, the trade would have worked on his chart. So it doesn't even really matter. It would have worked for him. So anyway, I'm not sure why he has failed there, but irregardless, I mean, if he'd have taken this trade, you know, and put his stop where it was supposed to be, it shouldn't have failed because there's a nice move up. There's enough to move up there to get 3 or 4 of those bars. So even using the new rule, he should have got out of that easy. So I don't understand how that trade failed on him. The only thing I can think of is he used the 8-tick rule and left his stop in the middle of the bar, and you're going to get stopped out 9 times out of 10. You can't trade that with this volatility. So hope that's clear. But if you're just patient and then suddenly you get a real second entry, and that would have worked, even using the rule, that new 8-tick rule before it backed up there. And that got us into the 2 o'clock hour. There's actually a nice second entry short there. We're kind of going sideways again, but notice that new low. First entry, second entry, and look at that big bearish ugly bar. And you would have got a runner. Of course, that's right at 2 o'clock. I mean, that's close enough. I'd say you could take that. That's like at 14:01. It's really not even 14:01 yet, so it's just barely 2 o'clock. So you may take that trade. There's another second entry short you could take right there. So anyway, again, this is just get my line back. I accidentally moved that earlier. This is just a spiking channel. Prices spike up and go into this channel. And again, this channel was, you couldn't find it till you at least got that swing. And even then, it didn't really help you other than that midline in there. But you can see how prices, this is exactly how prices do. Notice you got a lot of competing stuff. You got this trend line working up. You got the midline here. Prices are working. That's why it bounced early, because of that midline. So they bounced off that midline and went higher, because this is the more dominant pattern. Plus, you got this trend line working up and you got your first break. So you may get a retest of that high as well. And there it is. And you get a couple of legs up to a new high, and then it reverses. Exactly what we teach. Here's another one. You're working up here. You get a break outside, a couple of legs up to a new high, and then you get a correction. Doesn't necessarily reverse there, but you still get a correction. And really what you got here is you got one leg and then a second leg. Went a little further than that, but that would have got you, that's showing you it's probably going to come right back to the lows there. We went a little further than that. But that's still 2 legs of correction, and then it takes off again. So on the way up here, you had one leg and all this correction. There's your second leg. And notice where we got to the tick, basically to the tick. Look at that. I mean, just this stuff, show you this stuff over and over all day long. It takes a while to be able to see all that, though, and that's where most people think they're going to read a book and practice for a couple of weeks and see all this stuff, but I'm sorry, it just doesn't work that way. It does not work that way. So it's going to be interesting to see. Well, I deleted my 5-minute chart, but it's going to be interesting to see which that target right there is going to be real close to where we would have 2 measured legs up on the daily chart. And if we start turning down somewhere around 28.60 or so, I'd have to put that chart back up and look at where that price is, and we start turning down and start making another leg down. Just there's a possibility we could have a whole nother leg down. I hope not. I hope I'm wrong. But I've seen price action do this so many times. No, it's not 100%. We might keep going up, and that may not be a 2-legged pattern. It may end up being more to it. It may be several swings up to a much higher high. But if it turns down with that, and that turns into be a two-legged correction, and that's the center of the pattern, we got a long way to go to the bottom. We got to see another leg like that pretty much all over again. So just be watching that. Don't go trying to trade it and say I told you to trade it or anything like that, because that I don't want that on my conscience, because I could be wrong. I mean, there's not. We won't know till the pattern sets up. I mean, but I show you on this chart, size chart every day, and it works the same at every price level. We just got to see if that's what happens. So anyway, I'm going to wrap it up. 40 minutes, 10 minutes longer than I like to do this. But I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.